we realized that coming out of 2008 and 2012 in Europe, everyone lost faith in the banks, everyone lost faith in financial media. And so it used to be a centralized world where the power to run your money was concentrated in the hands of a few. And we thought about this and thought this has to change. How can you trust somebody you barely know with your life savings? You have to play a part in it. And that's the democratization of financial intelligence. We thought we need to give the same information, level the playing field for everybody. And Bitcoin is that in a whole asset class. You know, you're dead right. This Wall Street Bets is really about people taking responsibility. They will make mistakes. They will learn things en route. But it's the power of the crowd of people. That's social media now. You know, you and I are on Twitter, not because we just like laughing around on it, but we actually learn. You know, we're there to interact with people and learn. And this is the same thing with Wall Street Bets, and it's the same thing with the Bitcoin community. It's a place that starts with the ground up and not the top down. And that's a huge change and refreshing for all of us. So much of it is actually unnecessary for us to know. Because why should, you know, my uncle in India need to know about custody, clearing, all of this stuff? So our job in this, I think, is to make sure when we build out on Bitcoin that we make sure that it is accountable and we don't make the mistakes of the previous system. But so that it does give transparency by its definition of, exactly as you said, is how it's constructed gives that, and we need to make sure that we use it, because humans being humans will create complicated derivative layers over everything, and before you know it, we're blowing up, you know, a DeFi project in Bitcoin. I mean, who knows? So, you know, I remain a little bit cynical because humans are just generally by nature gamblers, and they always look for the economic advantage, and so therefore there's a way of obscuring the reality. But the good thing about blockchain technology is what it can solve here. So look, I am optimistic. I do think it's a sea change, and it is going to be more, you know, stuff like on-chain analysis will allow everybody the same access. That if you're a hedge fund, you know what the short positions are in the prime brokers, how levered everybody is. You know, you don't know on a name-by-name basis, but you know a lot more information. When you use on-chain analysis, it's publicly available for everybody. So you can see what's really going on. That's really interesting, as you said. That gives the power back to the little guy and levels the playing field. The investors don't look at it in those terms. Price is irrelevant. Okay. That's a retail obsession, right? Penny stocks, they're cheaper. For institutions, it is, what is the adoption, what is the regulation, what is the market cap? So the more it goes up, the more the market cap makes it available for them to purchase. So that is a much bigger deal than price. So price is a function of that growing market cap. But if you're BlackRock, you would not have looked at it until it got to this, you know, near $1 trillion market cap. And that's the thing. So it's not about price, because what they're looking for, nobody thinks when they buy, let's say the S&P 500 for a portfolio, for a larger portfolio, they're not thinking how much is it going to go up? Is it too high at this price? They think, what's the portfolio diversification effects? Does it help add accretive value? How does it perform over the cycle, meaning, you know, numerous cycles? You know, all of those things is what they actually look for, because they're looking for portfolio returns. This is an issue with the space, because the space still thinks of it in retail terms. So I think that structure will change. I mean, again, Michael Saylor and the corporate treasurers don't think of it in price terms. They think of it, what does it do to the balance sheet of my corporation to offset other issues that I have with currency balances and treasury ownings and bond ownings and stuff like that. At 1 trillion, it becomes a serious asset. At 10 trillion, it's gold in terms of asset size. So that deepens and makes a broader market and allows more participants into it. So if you think of the more conservative pension funds, well, they can't take it seriously because they still think they have career risk. But when it's a $10 trillion asset, it's not going to get regulated to zero, because $10 trillion is owned by individuals and pension plans and corporations and everything. So it's these kind of things that actually drive them.
So what kind of things are holding people back at the moment in the conversations that you're having?
Time. I mean, so I spoke to, so it just takes some time to onboard. So the conversations I get from family offices and institutions, I spoke to a big conservative asset management firm. I spoke to their Hong Kong office, and they're thinking through Bitcoin. And so I've given them the asset allocation paper that we got at Real Vision. We commissioned at Real Vision. I said, here's that. They said, that's exactly what we need. Now, can you present to this group? So I presented to that group, and then it's like, can you now present to the senior managers? Present to the senior managers. Then they need to write it all up. Then, if they say, yes, we're going to do it, how? Okay, now, we can start with futures, which is what BlackRock are doing. Because if it's cash settled futures, I don't need to worry about the bearer asset element. So that works. But after that, when they want to own Bitcoin, they need to get an entire new back office infrastructure. How do you price it? Nobody has consistent pricing. Nobody, what time does it close and open? Where all of the things that they need just for their risk models aren't normal. So all of this needs to be built out. And you need to get approval from trustees. So this shit can take 2 months to get to buying futures. It can take 9 months to get to actually buying Bitcoin and custodying it with somebody. If you think about it, right? You're in charge of your mum's pension plan and everybody like her. What you then have to do is justify that it's safe and it's secured properly and you've done all your due diligence, and that's a lot of work, because it can't be, look, trust me, it's not Michael Saylor, you don't own the company basically or have all the voting rights. You have to appease millions of policyholders. So you've got a massive legal liability. So you have to do all the work.
One of the most significant purchases of Bitcoin over the last few months was MassMutual, being an insurance firm.
Yeah.
Have you looked much into that? And have you observed that as being slightly different from other treasuries?
Yeah, super important. I think that was MYD as well, by the way. That is very important, because who owns massive treasury-style cash balances and long-term liabilities is insurance companies and assurance companies. This is exactly the kind of asset that they need. It's almost perfect for them, because they have these long-term cash flows and they sit on tons of bonds, tons of different currency exposures, and they need to model out the risks of that. And Bitcoin actually works really well. There's not many instruments in the kind of money market side of things that looks anything like this, because bonds, you're going to get no real capital appreciation. You don't get any interest. So how do you manage a massive pool of cash? And Bitcoin becomes really interesting for them. So that's just a start. Once we start to see more of those, I mean, I think the whole insurance industry is going to start putting this on their balance sheet. It makes total sense.